my student is doing very well. He's in London at the moment, and very kindly he has agreed to share his experience with us. He's an expert in all this fintech stuff for a number of reasons. First of all, he works at the biggest info provider in the world, which is Bloomberg. You might have heard about Bloomberg. That was candidate for presidency of the United States until 2 months ago. So he's an expert of information in financial markets. Secondly, he's also a venture capitalist because, as you can see from the logo of his slide, he works and owns Likas Ventures. And third, he's also an instructor because he's teaching these topics in London, as he will tell you. So I want to thank Andrea for spending 2 hours of his time. He's a busy man, and to spend 2 hours of his time for you, and he was going to give you lots of tips and ideas, including maybe some suggestion about what you have to do if you want to pursue further careers into this world. So first of all, thank you very much to Andrea for being with us today, and I'll leave the floor to him where he's going to tell us what's going on and the trends and the ecosystem and the disruption and maybe tips for you guys. So Andrea, thank you very much, and the floor is yours for our students.
Thank you, Vittorio. So again, good morning, everyone. Thank you very much for your time, actually. I think, I'm going to give my best to give you guys something today. I remember when I was sitting on the chair like you, and I really wanted, when joining these kind of seminars, to get some kind of value out of it. Just before we get started, a bit of housekeeping. So if you guys don't mind, I know you're going to have like plenty of questions. There is a chat on the team up. So if you guys don't mind, just drop in your questions there as we go. And then I will pick them up every once in a while, okay? Just try to keep your microphone mute so we don't get like any weird noise inside. And by all means, I understand this session is recorded as well. So you're gonna have the chance to go back and review what is not clear. By all means, again, just try to avoid any other conversation, the Q&A in the chat, so I can just make sure that I don't miss anything. Okay, I think it's pretty straightforward. Now, why am I here? So as Vittorio mentioned, I do a few things. I am right now based in London. I've been living here for 6 years, and I was a student like you at Vergata. Now, I am engaged in a few things. I work full-time for Bloomberg. I look after the business in Europe. And essentially what I do is Bloomberg offers a lot of services, and I kind of manage the business relationships with all our clients. Well, not all of them, but like good part of our clients in EMEA and especially Southern Europe. Other than that, I own a small VC and startup consultancy, which is called Likas Ventures. You can see the logo here, as well as I do a few other things. Then been writing for a blog, my own, that you can find on my website or on Medium. And also I cooperate with Ninja Marketing in Italy. I don't know if you guys know it, probably some of you do. You can definitely go and Google my name with the Ninja Marketing keyword, and my news stories should come up. And I teach and mentor startups at General Assembly. I'm not sure how many of you know General Assembly because it's not very big in Italy yet, but here in UK and US it's very big. It's an edtech startup, and what they do essentially, they were born as a coding bootcamp, and then they expanded to other skills. So of course I'm not a coder, but I can provide other type of experience, like as we will go through today, fintech, blockchain, cryptos, and business in general. Now, and then the other engagements, I mean, maybe we can spend some time afterwards if you have any question. Now, what we're going to do today, and I'm actually sorry I didn't put any agenda, I forgot about it. Essentially, we're going to have a conversation about fintech. I'll give you an overview. I'll go through some key topics that you guys, I think you should be aware. And then I will dig deeper into blockchain and cryptocurrencies according to time. So we're going to have 2 hours, going to be pretty in depth. Now, let's start with fintech. So I think, to understand the present and the future, you really need to understand the past, right? I will start with this quote here. Money is only a tool. We take you wherever you wish, but it will not replace you as the driver. Now, we always think that money is the final end goal, right? But it's really not. And and I don't want to sound like romantic here, but once you understand this, you understand that money is just a tool. And now the reason why I stress that is because if you want to understand fintech, you really need to understand what is the workflow behind it. Now, do you guys think about something that influences your lives? Your lives when you open a bank account, your lives when you date someone, your life when you pick which university to go to, or anything else, right? And there is only one word, which is, and honestly, I'm sorry, I wish we was a more interactive class so I could ask you guys directly, so I will just skip this part, but it's trust, okay? I really want you guys to keep this trust keyword in mind as we go through today's presentation, because I think is gonna make more sense as we go through. Okay, trust is the belief that something or someone is reliable. Okay, and it's very key to understand this. We will see why in a moment. The second concept is, as I mentioned, money. So money is just a good, is a tool. Why? If you go back in time, we didn't always had money, but we had barter, for example, right? You used to exchange, I don't know, this mouse pad and this phone, and they would have the same value. So they all have intrinsic value, and money as well have a value that is just based on something that is comparable. It's something that is agreed upon, okay? That's why we have different currencies in the world as well, because each country came up with its own version of money, and then eventually they all converge, for example, in Europe in a single currency, okay? So these are two very important concepts. Now, so what is that we're like, how do we connect all these dots and how do they link to banking? Because a bank is nothing but the provider of a centralized trust. The reason why you hold on a bank is because you need someone that is going to work as an intermediary and is going to guarantee and help you making sure that your money don't get stolen, transactions go through, and everything works in the financial ecosystem. Now, especially I think, and this is, I'm sorry, Vittorio, but this is very much like, especially for young people, like the new generations, this is more and more and more a very hard concept to grasp, I think, because the more, like, if you don't come from an, don't have enough history to know banking as it was, especially for you guys, a lot of things are very, they just make sense the way they exist, right? Apps, payments, and everything. I'm still struggling to explain my mother how Revolut works, for example, because it's just a different way. It's the fact that money were paper, and now everything is electronic. I'll give a small example. Living in London, I don't know how many of you guys had the chance to live abroad, but especially if you live in places like London, New York, you rarely have cash in your hands. I don't remember, and I'm not joking, last time that I actually withdrew some money from the ATM. Because right now everything is electronic. Now, when I travel back to Europe and I visit Italy, Portugal, Spain as well, I can see the difference because they ask me for cash money and they wouldn't take cards, right? Which tells you that the ecosystem is very different in different places. Why? Because there are like different reasons, right? It's like education, like a lot of things that went through in history. Each area, each ecosystem develops in a very different way. However, back to our point. So we have trust, we have money, and we have a middleman. Now, if we look at the financial industry, right, essentially what it does is it gathers all the players. So the buy side, people with the money, and the sell side, people that try to sell you something in order to get your money. And there is something in the middle, which is a middleman. Now, this is a very simplistic view, but if you think about it, you can apply these kind of three players at every type of transaction that you have. There is you, there is a merchant, there is a payment system. Now, the way the banking always worked was, there is yourself from a retail perspective that have savings, and you put your savings in a bank. Why? Because it's more secure, acknowledge your money as a source, and it's going to make your money work. So what it does, it just takes your money and brings the money to the financial ecosystem. And in the financial ecosystem, as you can see from the right scheme, you have another set of players. They're going to use this money to make other money, or to essentially match resources in the most efficient way. Now, what is key here again, and sorry for stressing that, but is the concept. Can I please put white screen? This is better. Excuse me, sorry, can you put the presentation full screen? Sorry, guys, I'm just reading about the presentation.
Don't worry about that.
I can, but if I do that, I'm not going to be able to read the chat. Can you still manage to, Vittorio, can you still manage to see the presentation properly?
Yes. It's okay. It's
yeah.
Okay.
Sorry about that, guys. It's just I only have one screen, and if I put the presentation full screen, I can't read the chat where you're writing right now. But I will send the presentation afterwards, so no worries. Like you will be able to zoom in. At this stage, you don't need to look into the detail of this one. Essentially, what he's telling you is, like there is a buy, middleman, and sell side, right? So if you think of yourself as a money, someone generating money, you take your money to the bank, bank gets your money, and then matches and makes the financial market efficient, right? Now, what happens here? This is how it worked until a few years ago. Then something happens, and it's not one simple thing, but a lot of people, like refer to the financial crisis of 2008 as the main trigger of fintech, which is kind of true, but it's not just that, I think. That's the trigger, but there were other things going on, okay? And we're gonna have a look in a moment. Now, I think the financial industry is pretty simple to understand, right? Like the workflow, this concept, is no rocket science. Now, what you need to distinguish is the commercial financial industry and the retail financial industry, because trust me, they're very different. Why? Because the type of people that interact and the players are very different, but also the challenges and whatever is impacting the industry itself. Now, if we start from the commercial financial industry, so essentially the financial industry of banks, there is actually one main event that changed a lot of things, which was MiFID II. And now I'm sorry if this slide is a bit wordy. We're gonna have a few bits of regulations here, okay? But MiFID II is very important because essentially what it's telling you is, look, the way the financial industry and banks used to work, it doesn't work anymore. So you guys have to change the way you do things. And two topics that came up very much are automation and electronification. I think Vittorio can confirm that in the old days, traders used to just shout at each other in a normal bank, right? Correct, Vittorio? They used to shout on the floor, make signs, things like this, right? It's not like that anymore. If you go to, I don't know if you guys have ever been to a trading floor, but I go there daily. I can tell you the last 3 years, 4 years, I've been for 5 years at Bloomberg. So I've seen this changing very much, especially in the last 2-3 years since MiFID II kicked in. They're very silent. Why? Because trading is becoming a job for nerds. It's becoming a job for, is a job already for more IT people than actual finance people, because everything is electronified. And when I say electronified, it actually has two meanings. One is the actual application to automation, which means we use robots to do things. So if before you needed, people with skills like math skills, network, think about whatever a person can do. Now you don't need that anymore because you have apps automated softwares, a lot of solutions, computers do that. And then if before you needed 3 people to do this job, now you need 1, probably half of it. Okay, and the type of skills that these people need are very different. Now, if you read through MiFID II, and also honestly, if you have time, just Google it. You find plenty of resources. You will find that MiFID II is not just this, of course, and as you can see from the slide as well, there are different implications, right? The way the financial industry works. For example, the way people invest your money, the way people invest your money, the way benchmarking is done, the way electronic trading is done, like everything is regulated. Why? Because in the past, financial industry, and especially the commercial banking, it wasn't very much regulated. And especially between the buy side and sell side, and by the way, just to clarify, sell side, think of a sell side as a normal commercial bank, like it'd be, I don't know, Bank of America, Citigroup, any market maker, and the buy side being a market taker, like, I don't know if you guys know BlackRock, your pension fund, your father's pension fund, whatever is that, right? So it's people holding the money. Now, if you think about this, they used to do things in a kind of non-recorded way. What I mean is, especially on the buy side, a lot of things were very subjective. And this implied what happened in 2008 in the financial crisis as well. So what MiFID II answer to is, okay, how do we make things in a way that is going to be fair and is going to be regulated for everyone, okay? And this is why, if you want to understand finance today, you need to understand regulation and what the regulator is asking. From MiFID to Basel, there are MiFIR, like there are plenty of regulations out there. ESMA is coming up with another one. You can find all of them on Google, really. Like you don't need any specific resource. Everything is out there. But the reason why I want you to understand the workflow and the regulation is because then you understand why the industry is evolving in a certain way and why we're speaking about fintech. Because finance is not enough anymore. You need tech. Why? Because humans are not reliable. And this is going to take us at the very end of our presentation on why blockchain is so disruptive. Because it takes the middleman, the human touch, almost away. And I'm sorry, like this sounds very bad, but unfortunately, this is what it is. Because of course, humans are subjective. Machines are more objective. Of course, you can make them subjective based on, how you set them up, but someone can control that. You could argue that who controls the controller, but that's a different story. And I agree with that. And we will leave that for the Q&A session, maybe. Now, if we understand all these bits, you understand why people like Bloomberg, for example, sorry for do a bit of branding here. I don't have shares, just, big disclaimer, so don't worry. People like Bloomberg make a lot of money because banks need solutions to actually address all these issues. And these solutions are based on data, based on information, based on trading systems, based on anything that you can think is going to automate and electronify work. Now, of course, there is not only Bloomberg out there. There are plenty of competitors, and this is growing more and more because there is a lot of demand. But you also have to keep in mind that it's not just about the vendors, because banks, and here I quote Lloyd Blankfein. If you don't know who it is, he was the former CEO of Goldman Sachs, and he defined banking and his company once, I think it was like 3 years ago before stepping down in favor of Solomon. And he said, look, Goldman is an IT firm, it's not a bank. And sounds crazy, but it's true, because banks understood this transition. They understood that not only on the banking world, but also on how to reach out to the retail ecosystem, they have to upgrade. And now they're facing this challenge where they need more tech and they don't need finance people anymore, or at least they don't need as many. Of course, you're still going to find a job in finance, right? I'm not saying give up on the ambition of working for an investment bank, because it's not the case yet. It's still like something that is, it's cool, like they pay you good money. They won't pay you as much they would pay you before. They would have paid you before though, because of course like financial skills are needed, but are not critical right now. Because the real challenge is to attract tech talent. Why? Because if you think about how a company works, um, and you understand the challenges that I just explained to you, you'll understand that banks are spending loads of money in vendors and solutions. And if this becomes too expensive, what is the only other solution? To start building in-house. So that's why they're hiring an army of developers, because what they need now is to, as fast as possible, upgrade and be responsive to the market change and the competition. Through this presentation, we'll go at some point, we'll look at Monzo. I'm sure in Italy, you know, number 26. For example, like there are plenty of like kind of, disruptive banks. But essentially, this is the example. Why? Because these are banks built on technology, and the actual banking function is probably 10% of the actual infrastructure that they have. I'll just give you an example. If you look at Monzo Career website, there is basically no need. Like you won't find jobs like trader, investment manager, or anything. We just find things like people manager, infrastructure systems, whatever, software engineers, because this is what these new players need, which tells you how much tech heavy they are. And this implies that banks, to keep up with them and be competitive, they need the same talent. So the next challenge for banking is actually attracting talent. Okay. Of course, there are others, but this is a kind of, I think, overview, right? That gives you a bit of understanding of, where we are and what we're doing. And the thing is, I like, let's see if I can share this one. Just a funny bit, right? So you guys might remember this one. So you all see financial industry like this, right? You think about So this is, I'm sure Vittorio's time. I'm sure it was like that. I can totally see.
No longer like this. Not
I can
anymore,
totally see. But the truth is, it's not very much like that anymore. I think it's very much like this now. With this silence. Exactly. Why? Because, like back to, jokes aside, like back to what I was discussing, it's becoming an IT game, right? And the big challenge is that a lot of things in banking were not automated. Okay, that's why they hire, like, you have these massive buildings. I don't know if you guys ever happen to be in Canary Wharf here in London. It's amazing, looks like New York. And yet you have like JP Morgan's headquarters, city headquarters, HSBC, like they're massive buildings, and they're full of people. Well, they were, because half of them have been fired or Brexited now. But they needed a lot of people, because having a lot of volumes implied that they need a lot of people to do a lot of manual job. For your knowledge, guys, a bank has a front, middle, and back office, right? And front office usually like salespeople, traders. Middle office can be still traders, support, and then there is the back office, which is the whole operational thing. Think about accounting, regulation, compliance, like all these things. And this has a heavy burden on the budget of banks, because of course they spend a lot of resources and a lot of salaries, and these people, you know, they used to get paid very good money. And the thing is, they're not needed anymore because they don't need them. They have a system. If you buy a, Bloomberg sells a tool which is called Dash. Essentially, what it does, by powering by big data and electronification of trading, gathers all the data of trades that go through all the systems of a bank, and essentially allows one salesperson to have just one Dash in front of them and cross trade and basically make money. The computer, the AI, tells you what is the next trade to do. So you basically know already where are you gonna make money. So how many people, how much relationship do you need at this point? Not much, because it's not something that that makes a difference anymore, because everything is electronified, right? I think this is a fair overview. Do you guys have any question here? So we do like a bit of Q&A, like 5 minutes. Can you drop anything in the chat if you do?
Or you can ask Andrea.
Yeah, or just unmute yourself, like it's fine. I'll take it as a no. So, we have Enrico. So if the machine make most of the job now, what is left to human workers to do? And how much? Okay. So Enrico is asking, so if machine and AI make the most of the job now, what is left to human workers to do? And in how much time do you think it will be substituted by AI so to do it? That's a very good question. Well, as I mentioned, first, we are not at the full automation stage yet. You would be surprised by how much banks are like behind on these things. Okay, they're catching up. There will be human touch needed, of course, because even if you set up an electronic trading platform, like someone or an algorithm, like someone has to set it up, right? So there is still the need for financial knowledge, for like less techy skills. But I see myself, like as I mentioned before, like what I see, and that's my personal vision, right? Is it's gonna be, and it actually is already more likely for someone that has a software engineer degree to become a trader than someone that has a business and finance degree. This is not to say that you guys choose the wrong path, but what I'm talking about is on the public markets, right? So you need to distinguish, and I'll pick up on this question, like you need to distinguish the private and the public markets. Like private markets, like let's say private equity, venture capital, they still work very much on financial skills. Automation is getting to private markets, especially DCM, ECM, but more slowly, okay? But if you think about stocks, bonds, like these kind of things, more life exchange related markets, I think in the next 5 years, that bit, because it's changing already very fast, I think in the next 5 to 8 years, like it's gonna be mainly IT people. So, and how much time? Yeah, like I think 5 to 8 years, honestly. Some functions are automated already. I've seen, I'll give you an example, Enrico, and that applies to everyone. There are firms that are automating the issuance process in DCM via RPA, which is robot.
DCM is debt capital markets, guys. When a company wants to issue bonds to finance through loans, okay, and issue bonds, and that's done by investment banks for them.
So thank you, Vittorio. So I've seen RPA applied, which means essentially there is a robot controlling the desktop, so the actual desktop that you use in a laptop, and once you set it up once, he knows exactly which bit to click to do the book building. Book building being basically a private equity firm that is going to issue the bonds, is taking orders from the clients, right? So you give them their money, they're going to make the investment out of that. This is a very simplistic way, but that's what it is. And this book building process is completely automated. Before there was a person doing it, now they don't need this person anymore. Okay, so I hope this answers your question. What are the competencies? Jonathan is asking, what are the competencies in IT needed for a job in training nowadays? Python, yeah, absolutely, man. Coding, yeah, you got it. Math, statistics, machine learning, AI, this is what you need. More than, and of course you need to understand finance, right? And here I think I'm very much influenced by my experience here. What they hire is the brain. The rest they will teach you. Like I'm telling you, I did a master's at Vergata. I studied here at Imperial College as well. But when I joined Bloomberg, I've been thrown into a full 6 months of in-depth training and work. And essentially I learned finance from beginning to end in there. Because there is this, like, firms will invest in you and they will teach you what is needed. Okay, university is great, but it doesn't give you all the tools that you're going to need, unfortunately. And this is the truth. Okay, so what I would suggest, and I assume you guys will have a business background here, is, but we will touch on this in a moment. Yeah, but just to answer the question is, upskill yourself in other things. You don't necessarily need to become a software engineer, but in 2020, you gotta understand tech, right? You can't just crunch numbers because you got machines for that. So let's move forward in the interest of time. Let's look a bit more into fintech itself. So I think this is amazing. This is an amazing quote, and says people need banking, not banks, and it's very much true because banking is a service. Banks are an institution. Now, as I mentioned to you, right? The main problem for banks is with all these regulations, all these, the economy in the last 10 years after financial crisis. Yes, stock market went very much up, but especially on the bond market and debt market, yields were negative. You know about quantitative easing, like markets we're not doing great. Okay, we're not giving a lot of return and a lot of spread chances for banks to actually profit. Now, if you understand how does a bank make money? So they make money on the interest rate, right? When they lend money. And if you think about a trading house, for example, they make money on the spread between bid and ask. So every security that they sell is like they take a commission. It's like when you sell something online, yeah, you sell like an iPad, you buy it for 100, you sell it 105. That 5 is your markup. A bank works nothing different like any other business because it's a business, as revenues as costs. Now, where is the problem here, and why fintech became in automation and technology became such a big thing, connecting to what I explained in the last half an hour? Because banks are private institutions, right? Like banks are private companies, unless it's like the national bank, the European bank, which by the way is private as well, but they're private banks. So they have shareholders that they have to respond to. And their ultimate goal is not just the financial efficiency of the ecosystem, but is to make profit because they're a business, right? So how do you make profits? The basic function of profits, revenue minus costs. Now, where is the problem here? Is that banks can't increase their revenues anymore because of tight spreads. Reason being electronification, which brings in perfect information, which lowers the amount of speculation that can be done. Rates, but they don't earn much because rates, especially if you look at the Bund, which is the German bond, like had negative rates, which means like you have to pay to invest in that tool, in that instrument. And it's like rates are very low and they don't make money out of it. I mean, they make few money, okay? So they try to expand their business. And where do they try to expand their business? In niches that they were not captured before. But what is the problem there? Is that that's exactly where the new startups and fintech companies are attacking. And they're much more competitive because they're much more agile, okay? And also they have a major advantage, which is the venture capital is at the back. And I'll explain you why in the whole ecosystem, why this is key to understand. Now, banks not being profitable implies that then the only thing that they can do is to act on the other variable of the equation, which is cost. And the only way to act on that and become profitable, not being able to increase the revenue, is to cut costs, so to find other ways of doing things in a more efficient way, which is why we go back to what I was explaining before, they invest a lot in technology. Because if you spend 1 million to have a workforce for a back office of 10 people, but that function can actually be done by one software that costs you 50K per year, man, business is business. People get swiped out, you just save money, okay? Because this is what investors want to see. There are a few challenges in this infographic here. I think I mentioned all of them, right? Then you can read when I give you the presentation, but this is what you really need to understand, is the way it works and the efficiency. Efficiency is key. Now, I'll just do this slide first, actually. What I was saying, what is a big difference also between banks and startups? And why people like Revolut, for example, are so successful? Because one key thing that they managed to do is to run at loss. Revolut hasn't been making money for years before actually becoming the big thing, the unicorn that is now. I remember when I started using Revolut, I was one of the first adopters. It was 2014, if I'm not wrong. And since then, company has been unprofitable until last year, I think. So 4 or 5 years, right? And why is this important to understand? Because banks have pressure. Banks have budget pressure, which doesn't allow them to be agile and take decisions. They have political pressure because they have all these people working. They can just fire people from one day to another. They still do, but they really can't. Startups, instead, have VC behind, private capital, and they run at loss. Why? Because banks working in the public markets and having access to negative interest rates, for example, means that they have very low yields. So essentially, an investor that puts his money in a bank that manages a fund based on markets like equity, FX, whatever, is still going to achieve a very low return, but people
with a high risk.
With a high risk, exactly. People investing in the capital market as a very, like, VC has a very high risk as well, but the investors, so people managing the money, have to produce some return, right? And they start looking for more opportunities to make money, because people managing money are hungry for yields. They're hungry for return, because they have people like you, like me, that invested their money and they promise them that they're going to give them at least 10% at the end of the year. Now, how are they going to achieve this 10% though? Because markets are not allowing you to do that. So what they do is they put this money in VC or private markets where, yeah, it's more risky, but there is much bigger chance of getting return compared to normal fund. So this allows people to inject money into the startups, and these startups to be able to run at loss for a lot of years, because the funds that invest in these startups have a lockdown for like 5-10 years, right? So if you invest in, I don't know, like Karma Partners, Sequoia, think about whatever, right? These funds, they have a lockdown of 5 to 10 years. So it's like you put your money today, you know that for the next 5 to 10 years, you're not going to see this money, okay? I don't know if you guys are familiar with crowdfunding. We're going to touch on that in a moment. But for example, we do some investments through crowdfunding as well. And it's like, okay, yes, it's risky, but it's actually gives you a better upside chance than what a normal index would do. And also, we know that when we put money in there, we're not going to see this money in the next five years probably. And these are still startups that go on crowdfunding. They usually are at a C stage, which means like, I don't know, max a ticket of max 500K in total, which means, you know, you can invest from 0 to 50, 60, 70, 100K. Okay. I think this makes a lot of a difference in the way startups and banks work and how reactive they are to the market. This one here, I think, is just a brief history to show you, but I went through this already. What I want to take you out of this slide is essentially how the market evolved in the last, now 100 years, how the financial industry evolved. And to be fair with you, financial industry has always been one of the most innovative. I know it sounds like a paradox because what I said before is like, they're really behind, and they are, but they always went in steps, right? There is one thing, waterfall disruption, then the next thing, okay? So it's very interesting to see actually how when 2007, 2008 came up, how many other things, just emerged, how many other solutions, because people lost what we mentioned at the beginning, trust in the banks. And funnily enough, 2009 is exactly when Bitcoin came, right? Just look how random. And by the way, it was 2008, but we'll get there in a moment. But that's when he picked up because people were looking for other solutions, for other ways to be in the financial markets, in the assets markets.
So Andrea, maybe you can, if you go back to this slide, I like this slide very much. The interesting part is the one here on the absolute right, where what's going to happen if this is a nuclear explosion in 2008, are we going to have a much bigger one here in 2020? And what's going to come out of that? Nobody knows, but there are signs, and maybe you can give us your thoughts later about what you think is going to be a possible evolution or disruption of new things coming out. Because I completely agree with you from this immense epidemic problem that we have at the moment is going to accelerate lots of changes. There are going to be losers, there are going to be winners, and new things. So this is going to be quite an interesting time going forward.
Exactly. And I think, it's good that you ask this question because like something that I think is different this time is that in 2008 was a industry problem that then had the effect on the world, of course, because the world is very much financial heavy. So it's like, we live in a capitalistic world. So of course, if something happens to the financial industry, it's going to have repercussions on everyone. But I think this time is very much different because this is a generational change. This is going to impact, like in 2008, the financial industry impacted the world, right? But this in 2020 is the world that is going to impact the financial industry as well as other industries. I just to take it away for a moment from the finance bit, right, to make it a bit more interesting as well. For example, my vision on the travel industry. I think travel industry is the most interesting industry to look at after this pandemic is over. I mean, it's probably like, and allow me to say this as well, but people say go back to normal. But first, if we are in this situation, probably normal wasn't really the right way of doing things. Second, I'm not sure there is a normal to go back to anymore, because inevitably, the way you look now at the world, at interaction area, has changed in your mind, inevitably, because something now has changed, and the way also businesses from the basic work from home, in Italy is called smart working, right? Here, smart working doesn't exist because it's not about being smart. It's about you just work from home. That's it, right? But these things, like this is going to have a strong impact on the economy and on the way we do things. If you think about the travel industry, right? I'll give you an example. So in my job, I travel a lot. I usually take 3-4 planes per week. Okay, so one of the reasons why I'm happy with this quarantine is because I'm actually home resting finally. I work a lot, but I'm not always on a plane. But think about how much money and how much money I bring through my company and through my business trips or whatever every week to the travel industry. Now, once you have been for 3 months in this, and maybe companies that were a bit, close-minded, they realize how much money they can save actually not having people traveling every other day. because they don't need to send them to expensive hotels, trips, last minute flights, cabs, anything. So most of the revenue for the travel industry is made by corporate spending, because it's not about just how much in terms of how many people travel for business reasons, but it's the average value of each trip. Because think about yourself, like when you travel for leisure, like as a student, but trust me, even afterwards, because like it's you don't just like to splash the cash, right? You work hard for it, you earn it, so you're mindful, and like you try and travel cheap. But companies, of course, they're more generous when you travel. So think how much money in these months the travel industry has lost because these companies are not spending anymore. And think how many companies realize how much they can actually save, slightly changing the way they do business. I am myself sure that Bloomberg is not going to ask me to travel as much as I used to do in the next months, because they realize it's not needed, really. Okay, so the travel industry, I think, is going to see, for example, a spike at the beginning, because of course people are freaking out. Like I'm sure all of you can't stay home anymore. Like even myself, I can't wait to go to a beach or a mountain. I just want to go out and 2 weeks going somewhere. So of course it's gonna have a spike. But I think in the long term, even the way we enjoy like services like that is gonna be very different. So this is a case where I think financial industry is going through a transition as well, but it's going to be very interesting to see how other industries get impacted by all of this, and eventually it's going to have a repercussion on the financial industry as well. Nice. So if we just to move forward, so if we look at the industry breakdown for fintech, right? We have like a few topics: insure tech, fintech. I don't know, investment tech. Okay, everything is tech now.
Reg
tech, right? So everything is tech now. But essentially, what it's telling you is, look, the industry is still the same. Just the way you do things is changing, which opens the space for new solutions and new businesses, right? But also calls for a change in the way old businesses used to do business. This is a very old, actually, breakdown of major and kind of collection of major players in the space. I got it like a few months ago, I think actually even a year ago. And this shows you already how much fragmented and how many solutions you actually have out there. And you know what is funny, actually, now that I think about it, is that, startups are meant to blast very soon because they're very risky businesses. But if I look at the names here, I can tell you for a fact that 85%, roughly, yeah, in each block that you see, they still go ahead. They haven't exploded yet. Like they're still growing. They're still, why? Because there is needs, and there is space for all of them. Okay, so the game has changed. The game now is a game that is played by a lot of players that just pick one specific bit. Banks used to offer like the full service. If you need financial services, you go to a bank, period. Didn't have other choices. Now, if you need financial service, okay, first, what service do you actually need? Because based on the service that you need, you can go and pick exactly the solution, right? So if we want to think about it as a modularization, or again, breakdown of the industry in small niches, and each niche has a bunch of solutions that you can use. Why? Because what startups understood, and again, I'm getting the example of Monzo and, well, Revolut actually, I think as the best example again, is they don't need to do all the back office stuff. They can outsource to a bank, and then all they can do is actually concentrate on the most profitable part of it, which is capturing the front end, aka the user interface and interaction. Why? Because they address exactly those problems the banks were not able to address. Velocity, so how fast payments go through. Customer service. Think about, I don't know how many apps you guys use, but think about customer service. That's the main pain point, especially when you go to a bank. I remember when I was back in Italy, even to get my scholarship paid from Tor Vergata, I was like, oh my God, I'd rather not have this money at some point than having to go through the whole process. But now, like even when the government, like here in the UK is amazing because if you pay too much tax, at the end of the year, they actually give it back to you, like for real. And they just send a bank transfer. 3 days, bam, you got it. Okay. So, and this is the government. And here the government is investing a lot in this kind of solutions. But again, like I can send people money with my smartphone, just like, one click, done. You don't have to wait the 3 days that you still have to wait in Italy, for example, in other Southern European countries. The money are sent instantly to each other's bank account. Okay? So the ecosystem is changing. Now, just a small digression on the industry and the skills. Like I think earlier, Jonathan again asked about the competencies, right? And this is more like of a career advice. I don't know how many of you guys are thinking of, working in the financial industry, or what you guys want to do. But if I were to go back today, so let's say I'm getting into, I'm going to uni today. I have to pick what to do. And let's say I pick business already because I really like business after all, right? And maybe I think, okay, I would like to work in the financial industry. So for sure, you need to know finance. Okay, that's one. You definitely need to know coding. And when I say coding, again, like you don't need to become a full stack developer, which means knowing every language and everything. But again, as someone mentioned, just get to know Python, start to have a basic understanding of, what are the main languages, how a machine works, what is machine learning, what is AI, like how do these things work and how do get applied to everyday's need, really. Learn about blockchain. Blockchain is something that got a very strong spike at the beginning. Now it's fading a bit because they're struggling to find the right applications, but eventually in the long term, it's gonna take pace again. Just I think the way people used to look at it, it wasn't very correct at the beginning. So they wanted to kind of have applications that were not really meant to be. Learn data science. We live in the big data economy. The real value is not money, is data. Think how many apps, how many things you subscribe to, how many companies have your data. Data is the real currency in 2020. Be good and learn and train in customer service. Because to who was asking me, what is left to human workers to do? Something that human workers do very well is customer service, is relationship. Chatbots that we're going to discuss in a bit are amazing. They're very smart, and probably artificial intelligence in the next 20 years is going to get to the point where you can distinguish a human from a robot. I mean, sometimes it actually is already. But where the human can distinguish itself is the customer service. I spent, guys, 2 years working on McDonald's when I was at uni, my first 2 years, part-time, to pay for the university and everything. And I'm telling you, even if it wasn't the best job in the world, it was really useful because they teach you a lot on customer service and how to interact with people. And this is what is key, because even today, those skills are skills that I apply every day, not in the same context, but they gave me the basics. And I can tell you that some people that I work with, I've been working with, you can tell who doesn't know customer service, doesn't have the experience in customer service, because there is a difference in the way they interact with clients and with people. And that makes a lot of a difference, trust me. Technology in general. And then, like, if you have time, user interface design and product management, I think, are interesting skills to grow. Now, what I would say is 11. I'm sure you're dying because I've been talking for almost an hour interruptedly. I would say let's take a break so I can drink some water as well. If you have any question that are raising from this hour, by all means, like, I'm gonna just pause the camera for a moment, but drop them in the chat, and then we're gonna pick up again for the second part. The second part, we're gonna go through some specific, more interesting topics as well.
Perfect. We're gonna start 10 minutes after 12. Back here, everyone. If you got questions, drop them in the chat to Andrea, and we'll start again at 10 minutes after 12. Thanks, Andrea.
Thank you, guys. See you in a
It's
bit.
12 here, not 11. Yeah, you know.
It's 11 here.
Ready, guys? We all back in?
Ready, yes.
Yeah, we are.
Here, and Andrea's back. So thanks, Andrea, for keeping up. And again, you have the full control of everything until the end. There is a lots of interesting questions going on there, and let's see what happens. But let's take profit of the fact. I'm not going to tell you what I think because it's irrelevant. Let's use the time to pick Andrea's mind on what's going on. So please go on until 1 o'clock.
Thank you, Vittorio. Yeah, a couple of interesting questions at the end. I just gave you guys a brief answer. And by the way, if you guys want to do something, I'll show it to you now, but if you go to my website and there is a sign up section, if you sign up, by all means, like I would suggest to do that. I usually send out a newsletter. You can read my blog. And of course, I'll just write it here. If you write at Ligas, yeah, so this is my email address as well. Well, one of them, but use this one. If you have any other question that you guys want to set up a follow-up as well, I'm more than open to like jump in a Zoom call with you. I'm pretty busy, to be honest with you, but no worries. We're gonna find the time. If you guys are flexible in the evenings, they have absolutely no problem. Okay, I personally really enjoy to do like, you know, chat about these things. And also if you need any suggestion, if you want to hear from my experience or anything, like I'm a big supporter of mentoring. So by all means, I'm always open to anything. Okay, so just drop me a message. Now, I would say let's go through these topics quickly and then we see if we can manage to get some space in the end for some discussion. So payments and open banking. Now, as I mentioned, MiFID II, right, changed the way we approach banking on a corporate level. From a retail perspective, something that really disrupted the way even companies get into the finance business these days is PSD2 and open banking. Now, what is PSD2? Just a big disclaimer here is that PSD2 and open banking, they very much are the same thing. The difference is that PSD2 applies in Europe, open banking applies in the UK specifically. Because here, you know, you should have understood historically they like to do things different. They always have to do it in their own way. So if it comes from Europe, it's not good enough. But essentially, what happens is that, and it's very interesting, banks before, as a institution, they had full control of customers' data, right? Now, but this was a kind of monopoly. So in the interest of fair competition, what happens is that now, under PSD2, all the banks have to make customers' data available, of course, in a protected way, with their consent, but they have to make this customer data available to the whole ecosystem, which means if a company, let's say, I don't know, Amazon, okay, not even a banking company, wants to set up a payment system, they can actually become a bank and like open a payment infrastructure and build it and use it, because given the open banking, they have access to the repository of data and transaction of each person. Now, what this means, this is like disruptive, changes the world completely, because if I have an idea, right, and I'll give you a few examples later, but think about credit score, for example. So something that, and this is very specific outside Italy, okay, which is in Italy, you either like someone that pay or doesn't pay. Like there is no such a thing of a credit score, especially because When you go and, for example, apply for a mortgage, or you go and buy your car, you get a leasing, essentially what they do is, okay, are you a good payer? Yes. Have you ever been flagged as someone doesn't pay? No. Okay, how much is your salary? 100K per year. Fine, check. Okay, gonna give you the loan. Now, the way it works here instead, and basically in any other Anglo-Saxon country, really, there is the concept, I think not actually in general, but Italy, there is the concept of credit score. Credit score means there is an actual score that you can see online as well. There are startups offering this kind of product, and it gives you a number from 0 to 750, if I'm not wrong. And essentially, the better you are, so there are few criteria, right? The more you're likely to get to be able to apply for things. For example, something that is important here is to have a credit card. You actually are meant to spend money on a credit card and pay them back, because this is going to create a track of history, yeah, that is going to define you as a good payer. Now, if you put this into the context of PSD2 and open banking, means that everyone that wants to profile potential clients and offer new financial services, right, is going to have access to all this information in a unified API, okay, which is a programming interface. An API is basically what links different functions, different apps together, okay? So PSD2 essentially say, look, everyone has to have access to this data. They can retrieve your data from a bank and they can use them in the ecosystem of that app. And with open banking is exactly the same. Now, it's not specific to payment themselves, but it's very much about the open banking. And these are technologies that things like Revolut, Monzo, like all these startups leverage. And that's why they don't need the infrastructure of a bank. Because you need to, if you think about it, right, the bank before was the only box containing all this data. So they needed a lot of operation to work. But if one layer of the banks was data, right, and customer information, now if I am building a bank, I can leverage just the connection to that database, right? And I can just focus myself on spending money on what is crucial to me. So you see, you go back to what I was explaining before. It's about picking a niche, and I'll pick on a question that someone asked, right? About how are banks, if we think the banks are going to disappear. No, it's just the ecosystem, the way it works is changing. Before there was just one institution that was there. Now is an ecosystem where startups and banks and other incumbents and newcomers, they can just cooperate. So the concept of partnerships is going to be key. Because in a perfect financial world, you have education, you understand finance as a person, and you just cherry pick the solutions that you need, and then you link them all together in one solution. Okay, there is a very interesting startup which is called Curve. I actually forgot to drop the icon here. Let's see if it's in here, but it's not. But Curve, go and check it out. Like, it's amazing. Curve, there is Go Cardless. What they do is, like, they give you one card, right? That you don't even need to have the physical card. It can be on your phone, right? On Google Pay or whatever. And this card links any other bank account of cards that you have in just one single solution. And you can program it in a way that is like, okay, look, when it's groceries, when there is groceries, sorry, I just got distracted by a question. That's a very good question. I'll answer in a moment. When you get groceries, pay with my Barclays account. But when I pay for games, use my Monzo account. When I pay for, I don't know, parties and drinks, use my Fineco account, right? So you can do these kind of things. Good question that comes in here from Enrico again. Thank you very much, Enrico. You're very interactive. I like that. Why in Italy has not been implemented yet? Well, kind of is. Like there are some startups that offer. You go and check out Fabric, okay, with a K. They are the equivalent of Plate, which is the biggest API and TrueLayer, which are the biggest players. But Fabric is very, very good. I know the CEO pretty well. He's a very smart guy. And they are doing this. Now, Enrico, what you need to think is how banks in Italy work. And I'm actually wondering myself why it has not been implemented yet. But the thing is, you need to think that all this system kind of needs an upgrade of a lot of things. And especially the Italian banking market, you would be surprised, but it's very innovative and is actually at the forefront of electronic trading. Is actually one of the most advanced markets. However, from a retail perspective, is the one probably the most behind. Why? Because of a very much cultural thing. In Italy, you still use checks, you know, like the assegni. Almost everyone is not in this chart, so you guys know what is that, right? I hear checks. They don't, like I remember I needed a check booklet because I needed it at some point, and I had to like make this weird request, like it wasn't even available online because just not existing here, non-existing. In Italy, I think it will come because it has to. It just is gonna take a long time because until the banks upgrade, right? And also like from a trust perspective, in Italy, the real problem is trust, okay? And the system behind how you build this trust. Because Italy is a place where you still need a public officer to come to your house and check whether you live in the house, vigile, if you move address. Here in the UK, this body doesn't even exist. Like all they base everything on, and actually in every other country really, is proof of address. So you have a bill, you have a bank account, the bank account sends you some statement, the statement is gonna have your address, is yourself, like there is a whole infrastructure behind there is different. So I think this is mainly why Italy is struggling, but also because there is no demand yet. Why? Because when I go I'm from Rome, right? So go back to Rome every once in a while. Go to Frascati, is my favorite place. Go to Fraschetta, try to have porchetta with wine. And if I want to pay with cards, maybe this year is coming up. But up to a couple of years ago, they were like, no, man, only cash. And this is crazy, right? Because how can you leverage these infrastructures? Why would you build these infrastructures if there is no demand? Because people still use cash. Okay? I think it's very much as simple as that, because you need to think that, yeah, open banking is good, is great, like all this innovation, super cool, but it's a business. And if there is no demand, why would you invest money in this business, right? Why would you offer the service if no one wants the service? Hope this answers the question. So, okay, the new paradigm for retail. What I mean is exactly what, and there is a video here, but we're running short of time, so I will send you the link afterwards. But it's very much how the whole ecosystem of retail changes. And I've been explaining this already, right? So you see here, we have banks, challenger banks, fintechs, funds, insurance, retailers, everything. And they all work together with an open API, which is PSD2 and open banking, that allows them to talk to each other, technologically speaking, and then to reach the final interface in a unified way. Because something that you didn't know probably is that Revolut, now they got the banking license, but when Revolut started, and you would go into your app and check out your bank account IBAN, yeah, the bank account code. It was a GBLLOY, which means Great Britain Lloyds. So essentially, they were offering you the app, they were giving you the nice interface, but your bank account was a normal bank account that you would have opened with Lloyds Banking that I had already at the time. So this is super interesting. I'll show you something actually. I am very sorry I didn't put this into the presentation, but I think, sorry for this archaic way of showing you things. I will show you something quickly, actually, because I think it's going to be pretty interesting. Yeah. So, and again, sorry for doing it this way. I logged into my Lloyd's bank account. Okay, I don't use Lloyd's as my main bank account. I have HSBC, but as soon as I log into my bank account, and please tell me if you can see this. See, there is this open banking. And essentially what it does is if I click on that, it explains me, look, through Lloyd's and open banking, you can actually connect your account to all the other accounts, which means essentially as simple as in my Lloyd's app, I can actually connect and see my HSBC account as well. Okay, so you see that through this open API, all the banks are talking to themselves. And if you put this on the Monzo challenger banking context, you understand why they're so lean and why they're so innovative, because they're much faster and agile than a normal bank. Banks are adapting now. They wouldn't have before. So what are the strategies, right? And this slide kind of answers Marco's question during the post, which essentially there are a few strategies that bank can take now, right? They can become a utility. So essentially they just, do the back office work and leave the interface. They can become full service provider. Actually, they can jumpstart again, re-innovate, upgrade, and now they know that it's possible to actually offer some services and there is demand, start offering them. They can become a supplier. So they can actually give services leveraging their existing infrastructure to the new banks, which is kind of what they were doing at the beginning. Or they can just become the interface and actually just turn around, right? And leave the back office work to new startups that are just offering back office solutions, for example, or compliance solution, and just focus themselves on the actual banking practice, which is what probably they do best, right? So there are my personal vision on this, because I've been asking the chat as well, and I think again is a very interesting bit. I see very much two potential outcomes. One of which is less likely because it's kind of very hard to achieve. So one outcome is the mass acquisition, which means banks at some point will start just buying all these competitors because they still have the kind of power. But I don't think that is what is going to happen. I think banks are going to become kind of the center, the epicenter of this ecosystem that will try to adapt and become a marketplace. And then they will allow all the other startups, each one, to run their own small part of the business and then interact with them. So what I see happening is that the financial industry is going to become like an e-commerce industry. In fact, I think very much they're going to merge. Because I don't know, I don't think in Italy they exist, but here supermarkets like Sainsbury, Tesco, they have Marks and Spencer, which are basically the equivalent of Coop, I don't know, Auchan, like the supermarkets in Italy, yeah, Esselunga, whatever. They are banks. Like I have a loan with Sainsbury Bank, okay? So I think banking as we know it eventually is gonna fade just because everything commerce is gonna be banking. Why? Because do you guys remember what we said? Excuse me. Kind of 1 hour ago. People need banking. People don't need banks. This is very important. People need the money and people need the banking services. Don't need the bank as an institution. Because if Tor Vergata is gonna disappear tomorrow, or as you can see now, you can't go and be a university. Do you guys need a university, or you guys need courses, lessons,
Yeah.
education, right? It's exactly the same thing. You can totally live without going to the amazing fields of Torre Vergata. It's sad because they're very nice, but it's better than stay home. But still, you're still learning, right? And it's exactly the same. The example of Monzo gives us the real life application. So Monzo and Revolut, I'm just gonna flip between the two slides, but you see we have one here and one here. But I think the picture here in Monzo is more interesting. Monzo is just like an epicenter of the ecosystem, right? And then it just gets all the different data. So for example, Monzo used to offer at the beginning the money currency exchange through TransferWise, right? So they still offer the service, they just use another provider. Why? Because their business is not doing like FX, right? Their business is banking services, okay? And then there are plenty of other apps. So I hope like it makes sense. I don't
So,
think
Andrea, excuse me.
Sure.
Monzo is a bank.
Monzo is a bank, yeah.
It's got banking license.
Yeah. As far as I know, recently they did.
Revolut has banking license. Yeah. N26 has got banking license.
Yeah.
I didn't know Monzo has a banking license.
They should have gotten recently, but yes, they do. But they're proper banks now. Yeah. Just a question coming in. Do you think this trend of running at loss will allow to build a sound and suitable ecosystem? Amazing question. Is fintech basically you're asking? Is fintech a bubble? Well, yes, I think, because if you Google it, there is a story of Long Island iced tea. So there was this company called Long Island iced tea, like I think it was 2 years ago. They were in the stock market. Yeah, they're public. And when the blockchain thing was spiking, at some point these guys go like, okay, let's change the name. Or we call ourselves Long Island blockchain Long Island iced tea, or like crypto Long Island iced tea, or something like that. Their stock spiked like 700% of 1,000%. I don't even know, like something crazy went on the news because they were just put blockchain, fintech. Why? Because if you go back to what I was telling you earlier about the investments and the way they get the money, investors are hungry for return, that's one, but also they're hungry for risk exposure and exposure. This is how they manage their investments, right? This is how they decide what to invest on. And something that, of course, is attracting a lot of attention because it's a fast-growing industry is fintech. So what they do is they need to get exposure to fintech companies. Now, what is the problem? Is that there is only one Revolut, and he's not always looking for money. So if I come up with another company that does exactly the same thing, and it's called Revolut 2, they're going to give money to me because they don't care about, I mean, of course they do, but like what they care about is they want to be exposed to that industry niche that is fast growing because they know that it's going to give them return. And this is what they're doing here. That's why there are plenty of startups. And of course, I work myself with a lot of fintechs. And I'm telling you, like, I met people, and I don't know if you guys are familiar with Web Summit. Web Summit is an amazing event that runs in Lisbon in November, usually. And it's like 2 weeks, yeah, like 10 days, no, a week, it depends. But like full immersion startups. Like it's amazing. You go in there and every day there are like 4 pavilions full of startups, and every day you have different startups. So, and of course, like I spent most of my time this year on the fintech bits because that's where I go and look for, potential investments, startup to cooperate with. And I saw like the craziest things coming up. People that actually had funding first, they did not really reinvent the wheel. Like they were just literally copying something that existed already. And others that had this like weird Bitcoin, whatever coin currency idea. You look at them like what is this? Still, they get money because it's appealing now. So I don't think it's very sustainable in the long term, honestly. I really don't. Or at least I think it can be sustainable for those players that are running a loss. I mean, that are established already. So, tomorrow, I'll give an example. There is a another crowdfunding round for free trade, which I will touch on in a minute. And for example, that's a company we have exposure to, and we are looking into a kind of, putting more money into it. Is it profitable? No, but yes, in the next few years is eventually going to be, because it's very well established in terms of competition. Like, it actually makes sense. Will we invest the same money in a similar app that is new now? I really don't think so, because it's like everyone can replicate, because technology nowadays allows you to do everything. But it's very much about the execution and very much about the how much established it is. And the truth is, like, people, yeah, okay, at the beginning it's like the the taxi apps, right? You go to Uber, they give you £10, then you go to Ola, then you go to Captain, then this, then that, because like it's a very service-based business. You just buy your cab and you go, and that's it. And whoever gives you the discount, you move up. With banks, it's slightly different, because of course you get used to the service, you trust it, and they kind of build loyalty with you as well. So I think for established players can be sustainable. For new players, definitely is going to burst at some point, because of course the industry is getting inflated as well. Now, no worries, Marco, my pleasure. Now, one topic that I really feel attached to, which is financial inclusion. I recently got published something on the MIT. I don't know if you guys know MIT, is the Massachusetts Institute of Technology, is one of the best universities in this world. And I just got published on paper, a small article that I wrote on financial inclusion. You can read the extended version, because this is like a kind of wrap on my personal blog. And essentially is, we live in the developed countries, right? But still in developed countries, you have the concept of unbanked and underbanked, and the problem of financial inclusion, which means not everyone has access to financial services. In fact, there are 69% of adults at the moment have an account, which means 30% don't. Okay? And like, this is crazy, because it's the basic service that allows you to do a lot of things. If you think that 1.7 billion people in the world are unbanked, which means they don't have access to any banking service, right? It's crazy. Why? Because living in a capitalistic economy means that if you don't have access to the basics of a bank account, you can't use banking services. And back to Carlos' question, why in Italy is not, this didn't evolve yet? Well, this is one of the reasons. Because a lot of people still put their money under the mattress. And this is why they just unbanked, they don't use banking services. Now, if we want to put it in another context, think about third world countries where people struggle to even save some money, right? So this is where finding strategies to actually capture these people, these potential clients, this is going to be the real challenge. If you tell me, okay, what is, in your opinion, the next thing in fintech? It is financial inclusion. Financial inclusion is the next thing, because what I explained you so far happened already. It's already on the move. There are solutions, plenty, too many. Financial inclusion is something that is going to be the next 5 years challenge, tech for good. And what I mean is basically give everyone access to basic financial services. And this is very important, because how many things you can do if you have a bank account or a credit card, right? Even from starting a business, which now you can't. Now, what is the difference between unbanked and underbanked? Unbanked are people, they either, because of their choice, or they just can't, they have no access to bank accounts, like to serve any financial service. Underbanked are people that might have some access, don't have full access to all the services that we do, for example, or they just don't use all of them. And if you think about how many people are out there that are falling into this niche, the next startup and the next idea that comes up and is able to capture this kind of space is gonna make shitloads of money, because this is like you're just creating a new market rather than keep drilling in a market that is overly penetrated. Now, how do we achieve this financial inclusion? Of course, there are 3 dimensions, as I mentioned here: access, usage, quality, and service. Now, the access is very much, how do I access that? And the availability of a smartphone, of internet connection is key. The usage. Now, what is the problem is that I can give you access, but if then I explain you how to use things and I teach you how to actually make the most out of it, you won't use them because you don't trust them. Think about your grandma, yeah, that she probably keeps or used to keep the money under the mattress, right? I remember mine. She was like, no, I don't want the money in the bank. I don't trust them. Like the day she would get her pension, would send my mother to the post office 1 minute after to take it out and bring it home, because there was no understanding and no trust for the bank itself. And then quality and service delivery. Of course, if we are in a lemon market where we all think that banks are poor products, very expensive, there is poor customer service, why would you go and serve yourself there, right? There is no empathy. So of course, these dimensions are key. Now, there are actually high levels that have been, and I would strongly suggest you to go and check this out on the World Bank website. These are the 8 principles. You can read them. I'm not going to go through them. But there is an actual, it's like sustainability, right? It's like ESG. There is an actual movement, people that are working on this. For example, and I'll link to Gabriel question, which is talking about financial inclusion. Is the equity crowdfunding trend, like a crowdfunding IPO, a good way to democratize finance and investment mindsets? Do you think this model of funding for companies is promising? Yes, I do. And I'm a big supporter of crowdfunding. And in fact, Gabriel, you can see here, there is DC, which is Crowdcube, which is probably the best crowdfunding platform together with Seedus. There are plenty of solutions out there that actually can be, in my opinion, qualified as financial inclusion. Why? Because we don't need to think of financial inclusion just as okay, I'll give you a bank account, I'll give you a card. But what I build around it, the most successful case so far in the world is this one in green, M-Pesa. M-Pesa, go and again read about it because it's amazing. It's the only startup so far that first had a massive big exit because it's been acquired by Vodafone, addressed the problem of financial inclusion down in Africa. How did they do that? Essentially, they built an ecosystem of people using their, not even a smartphone, like the Nokia 3300, right, 3300 or 3310, like the was impossible to destroy. That level of phone, like very old normal phone, through texts, they created an ecosystem and a technology that allow people to send payments and collect actual money from check-in points in the country. I won't go in depth on how it works because then it's going to take too long. But what I want to tell you is this is, and please go and Google it, this is the real example of financial inclusion. So essentially, they captured all those people that had no access to bank accounts and no access to money transfer, and they found a very simple way to capture that. Now, why did I put Facebook there? Because another thing that can foster financial inclusion is the access to the internet, right? Back here, the access to financial services. How do you access them? Through connectivity. How do you give connectivity? Facebook embarked in a project of providing free internet access to the whole of Africa and third world countries by 2030, I think, or something like that. And they're doing it. However, there are other things. Go and check out this BIM. This is amazing. I kind of work with them as a volunteer sometimes when I have time. But this is amazing. So, like people do a lot of charity. They send money to pay for homeless people and everything. What these guys do, they applied crowdfunding to charity. And what I mean is, rather than go and give your money to Red Cross or Amnesty or whatever, they sponsor a homeless person on the website. They crowdfund this homeless person. And essentially what you do is you donate for the training of this homeless person who is going to actually get taken away from the streets, gets access to some basic services, and he learns a skill, right? He learns something to do and gets a job and gets taken away from the roads. And this is actually a very good example of financial and social inclusion. And these are the challenges that we will be facing, that we have to face in the next years, because these are the real challenges that are left that has to be addressed in the world. Back to the crowdfunding. Crowdfunding is amazing. Crowdfunding is one of the examples why fintech is getting to the private markets as well, because a lot of companies that I know, a lot of startups that I know, they now don't go to private investors very much. They pick one or two private investors, and then the rest they take it from people, because it's actually much cheaper for them to go crowdfunding, because they can give less equity, nice perks, and for a cheaper operational price, they can get access not to a small niche of private investors. No, their playground is the world, right? They cannot get access to me, to you, to everyone. Like free trade. Again, I'll give you this example. They did their first round of crowdfunding last year. It was June, I think it was either June or July. I remember I was traveling. I was on a plane. The first round was in May. The moment they went live on Crowdcube, they basically broke the website. And what I mean is, like, they literally broke the website. The website of Crowdcube has been down for 2 days, because by the amount of people that wanted to put even 10 pounds in that startup, it just broke. So what they had to do was to set up a private investor session first to those that kind of subscribed in advance, and give slots to people. And this tells you, like, they aim to raise, I think, 1 million, and they ended up raising 4 million, like something like that. And this is why I think it's very promising. It really is.
BIM is in the UK.
What was that?
In the UK based?
Yes, that's correct. So BIM is a UK-based solution. So, yeah.
We've been discussing just briefly yesterday these two topics you are touching better now, which is one is crowdfunding. I mentioned that how important that would be, because exactly for access to small projects from individuals before they go public. And secondly, so it's an additional avenue, and we both like it. And secondly, I touched upon this inclusion story about the third world, the fact that so many people don't have any access, and it's also very difficult to apply the usual banking paradigm of credit scoring and credit worthiness to people who don't have any score or don't have any name or any document, but using instead connectivity and technology like social network, like Facebook, etc., can give an alternative view. So this is something which I'm happy you're touching upon. Don't forget, you still got 10 minutes.
Yeah, no, I think, look, there is one last topic which I want to touch on, which is the gamification of savings. Now, gamification of savings is something that gets along with financial inclusion. Democratize trading for everyone. They allow fractional shares pretty soon. They're going to launch this product. Essentially, they're going to give access to trading to everyone, like crowdfunding, right? But you can do your trading. Clio is a chatbot. Check it out as well. Essentially, it's a chatbot that is going to help you getting your finances and everything in order through a chatbot that tells you how much you're spending, where you're spending. And then there is one, and this, again, big disclaimer, I'm actually working with startup with this one. And this guy, I met them at Web Summit. They're based in London, but the app is available on the App Store. And you can actually go and check it out, both for Android and Apple Store. And what they do, they gamify savings, which means they go to the next step. Since all the services exist, now the next step is instructing people on how to save, how to make their money work in a good way for them. So this is where they come in with a very nice interface. They are that marketplace that we were talking about. They use open banking. They have nothing in their infrastructure but an interface and a database that tells you how you're spending your money, puts you in competition with your friends, tells you, for example, in your area, given your job, people usually spend £1,000 per month. You're spending 1,500. Let's see how we can improve this. What are you doing wrong? And you will be surprised. I'm sure you guys are all super smart and you all have the best financial knowledge. But trust me, I myself work with people that you hear, because of course you talk to them and they're seasoned professionals as well. And the way they spend their money, it's very weird to me as well, because they just don't think about these things. So they don't know about solutions and things that are out there that can help them saving money and everything, right? So even this gamification bit, I think, is another interesting trend to look at in the next years. Now, we have a few minutes to go. Sorry we went long, but I mean, I'm always happy to have another session at some point if we want to discuss just blockchain and cryptos in depth. One thing that I want to tell you guys is go to my website, subscribe to the newsletter, or send me an email. This is the address. And again, you can find me basically everywhere. Every single social network. Start from LinkedIn. By all means, add me on LinkedIn. If you guys do this and you give me your emails, or I'll ask Vittorio to provide them to me, something that I wanted to add to this presentation, I just didn't have the time, was first, all the links that I mentioned to stuff that I wrote, you can read. I'll give you a couple of other resources. And also as a perk, so you guys can start kind of upgrading, right? There are a few startups in the fintech space I work with. They offer paid services, but I get, of course, freebies, right? So 3 months free or stuff like that. I will send you some links and some codes by which you can go download these apps, get them for free for a while, play with them. Then, of course, it's up to you. To me, if the startup is successful, I'm happy. That's my game. It's not that, but I don't get anything out of it. But you guys get access to something and you can play with it, okay? And you can start understanding, different things about fintech. That said, again, happy to set up any chats one-to-one if you guys want to organize a group session. According to my schedule, more than happy to do it. So don't be shy. I'm very friendly, so just reach out. Now, I still have a couple of minutes. Do you guys have any questions, something that you want me to address now? Please leave it.
There's a couple of questions coming up here from Leonardo, etc. What is the most practical thing to do? Is that you send those links to me and I share them, or you want the students to contact you best? What is the best way?
I'm happy with them to contact me directly, because it's gonna give me a chance to also get to know you guys. You can, Leonardo and the others, yeah, if you can please just email me, okay? Do both. Subscribe if you're interested in what I said today and you want to keep up with what I'm producing, but subscribe to my newsletter, because that blasts out everything. But you have my email. Just send me an email as well, so we create some connection. If you add me on LinkedIn, you can send me a LinkedIn message. It's just the email allows me to put everything together. If you guys start text me on different places, I then might lose some messages. Eduardo is asking, how do you see the emerging of several different cryptocurrencies? Would agree a new forex type system? Well, but that happened already, right? There are exchanging out there. Sorry, guys, excuse me one moment. Okay, sorry, guys. There are a lot of exchanging. I think the crypto space as well is a bit inflated too, but it's definitely the way it's going. In fact, you can Google that. There is a very interesting webinar, and actually, if you, Eduardo, email me and you remind me, I will send that link as well. And they held a very interesting webinar 2 weeks ago. So Bank of England is seriously thinking about releasing digital money. So is the European Bank. So it's not about crypto themselves as in Bitcoin, but it's about playing the technology. And digital money will definitely be a thing. So yeah, I see that right.
Bank of China is very serious about that as well.
Yeah.
Bank of China. So.
Yeah. There are like is a thing, because if you understood what we've been discussing so far, that's simply the way to go. Period. There is no other.
Guys, listen, it's 1 o'clock. There is one final question from Enrico, and then we have to jump first because we need to free up Andrea, who's busy with his normal business life.
I actually have another call in a moment, but just to answer to Rigo's question. Yes. I'm reading that coronavirus will help the cryptocurrency to gain value, even more popularity. What do you think? Honestly, I don't see why it should. A pandemic, like global pandemic, foster cryptocurrencies. I don't think it's that. I think it's gonna help electronification. I don't think the pandemic itself is gonna be a gateway for cryptocurrencies. I think it's gonna be a gateway for more electronification of services, of fintech, absolutely. As a rebound cryptos as well, yes, by all means. But I think the only way, and again, digital money, non-crypto themselves, is going to have an impact is that by implementing digital money in an ecosystem like this, we are going to central banks are going to be able to have real impact with economic policies and monetary policies in a faster way to the market, because you also have to remember that the way it works today, when banks run quantitative easing and all the other stuff, money don't get sent directly to your pockets. They go to banks. And think about this, and I'll leave you with this thought. If you remember, I'll explain how banks make money, and I told you the rates are negative in some countries, which means -1, -2. When you go and get a loan, you still get charged 7%. So from -1 to 7%, there is a middleman, which is the bank. Period.
Very well. Fantastic. This is excellent. So one minor thing is, Andrea, if you can leave us your slides, they are going to make them available for everybody.
Absolutely.
Of course. And secondly, I would like if everyone now can, just for a second, take on their mics. All students, if you can use your, activate your mics, and let's give a big round of applause to Andrea for all his effort and taking the time for us to do that. Thank you very much. Thank you very much, Andrea, for your time. Thank you.
Thank you, Andrea.
Thank you. Thanks very much.
We managed to create an online applause, which is a new thing, and we are breaking new ground. So thank you very much. Greta, please send me the updated version of this attendance when you have a second, not urgent. Let's thank you very much, Andrea, for all your help, and see some of you guys at 2 for the trading course, and the rest of you for this course tomorrow morning at 11. Thank you all. Bye.
Ciao, guys.
Bye.
Have a very nice day. Bye-bye.
See you all.